Hey, what's up, everybody? It's your real entrepreneur coach, Arthur J. Moorer. Hey, guys, today we are going to take about 30 minutes and we are going to dive deep into understanding how to leverage your tax write-offs. As I said to you guys before, whoever have been watching me when I've been doing the step-by-step guide to start your own business from A to Z, I put out a post sometime probably about 2 weeks ago saying that I was going to give you guys a free bonus to learn how to understand how to leverage your tax write-offs. So we're going to dive straight into it, guys. I'm going to get straight to it because we're going to do this in about 30 minutes. So if you are looking at this Zoom meeting at this particular time, or if you are already joined into the Zoom, I want to make sure that you guys get a piece of paper or get your recordings, turn your recordings on, and record this information or write this information down for the next 30 minutes. It's now 8:01. We're going to stop this call at 8:30. I'm going to try to get this done by 8:30, guys. So we're going to dive deep. Let's get straight to it. Okay, a lot of you guys may be wondering, okay, when you make $100,000, when you make $60,000, and you're paying so much taxes to the IRS. A lot of you don't even know how much money you are paying to the IRS. So tonight, guys, I'm going to break down to you how much money you are paying to the IRS and show you how valuable it is to have a home-based business and how you can leverage your tax return, leverage your taxes by having a home-based business. Now, again, guys, I'm not showing you this so you can eliminate paying taxes. I'm just showing you something that the rich been doing for day one. I'm showing you how to own a home-based business, which is the cheapest business that you can have. The lowest business that you can have is at home. I don't like to use the word cheap, so I'm gonna say the lowest way of starting a business is at home because all the overhead comes to you in your home. It don't go to somebody else who owns the building. You guys get what I'm saying? It goes to you. So let's get straight into it. 2024 tax rates for a single taxpayer. Okay, we're talking about a single taxpayer. Okay, and then we're gonna scroll down. We may touch if you had a household, but right now we're just gonna just deal with if you are a single taxpayer. Now, right now, if you make it anywhere from $11,601 up to $47,150, you're being taxed at 12%. If you make $47,151 up to $100,525, you're being taxed 22%. If you make $100,526 up to $191 and $191,950, you're being taxed 24%. 32%, 191,951 up to 240,3725, that's 32%. 35% if you make anywhere from $243,726 up to $609,350, you're being taxed 35%. Now, if you're making $609,351 and up, you're being taxed 37% of your income. Are you guys with me? Now, some of you guys may not know this. Now, this is public information. This is information from the IRS website. But I just want you to know this because a lot of times you make money, but you don't even know what you're being taxed. So all you're saying is, hey, look, I'm being, oh man, they're taking so much money out of my paycheck. They're taking so much money, I'm being taxed so much, but you don't even know what you're being taxed and why you're being taxed. So I just showed you the tax rate of how much you're being taxed based upon how much money you're making. All right, so go ahead and look at this. Go ahead and record this screen. All right, here's an example. All right, if you made $58,000, the portion is taxed at 22%. All right, if you made $47,150, your portion to be taxed is 12%. All right, so let's go ahead. Let's go to a calculator. Let's put up a calculator, guys. Let's see if I can go ahead and put up a calculator real quick. Let's see. Let's go calculator. I want to put up calculator so you all can see this. All right. All right, let's go with the calculator. Let's see if the calculator opened up on here. If not, then I'll just do it manually. Okay. All right. Calculator. Okay, here's a calculator. Okay, so let's just say you're being taxed at 58,000, 58,000, and you're being taxed at what? Times 22%. Where's my percent sign on here? Okay, here we go. All right, 22% equals $12,760. So you guys are being taxed $12,760 of the $58,000 that you made. So over every time you get a paycheck, $12,760 is being deducted from your paycheck. So you're really making $12,760. So you talk about $12,760. Let's clear that out. $12,760. So you're talking about 58,000. Take away 12,760. So you're really coming home with $45,240 from out of 58,000. You guys see that? So now when you're working a job, now, and this goes down to the 11,600. When you're working a job, guys, this is what I want you to understand. And I just showed you that at 58,000 at 22% tax bracket. And if you go back here, if you go to the IRS website, just go right here, just go to our income tax rates or income tax bracket. And this whole a scale that I just pulled up, you're going to see it for yourself as well. So it's good for you to understand this, because if you don't understand this, you're just working in the blind. Okay, same thing when it comes to a business. So it don't matter if it's a business or personal. This is just what the percentage is based upon your gross income. All right, this is what you're going to be taxed, business or a job. But the beautiful thing about a business, I'm going to break that down to you in 1 minute. Okay, so now let's look at this. Again, we got 10%, 12%, 22%, 24%, 32%, 35%, 37%, and I just did the breakdown on 58,000. All right, so 58,000 is when you start getting into 22%, $47,151. When you start going up to 58,000, because at 47,150, which is right here, 47,150, you still been taxed at 12%. But once you get up to 58,000, it's going to convert over to 22%. It's what you're going to be taxed at, your tax from the IRS. You guys with me? So now let's go here. I just want to show you what you'll be taxed on your dollars, because a lot of you guys don't know that. Now let's go with married, filing jointly. Let's take a peek at this. All right. So married, filing jointly. Okay. So you're talking about if you make 23,000 up to 94,000, now you're gonna be taxed at 12%. If you make 94,000 up to 200,000, you'll be taxed at 22%. If you make 201,000 up to 383, you'll be taxed at 24%. 32% at 383,901 up to 487,450. 35% at 487,451 up to $731,200, and 37% at $731,201 and up. This if you married, filing jointly. Okay, now we're only doing 30 minutes of this, guys, so that's why I'm going quickly. So you gotta be writing this information down, and I'm showing you the screen, so you want to be copying the screen so you can actually see exactly what's going on. All right, this is married, filing jointly. We did single. All right, let's drop into married. All right, filing separate. Married, filing separate. Okay, if you make 0 to 11,600, it's 10%. 12% on 11,601 to 47,150. 22% on 47,151 up to $100,525. 24% on 100,526 up to $191,950. 32% on $191,951 up to $243,725. 35% on $243,726 up to $365,600. 37% tax on $365,601 and up. If you're head of household is what? Head of household meaning that you are not married. And if you are married, the spouse do not live in the house with you and have not been living with you for over 12 months. So therefore, all of the bills is in your name, and you are taking care of 100% or at least 60% of all of the utility bills and all of the bills that it takes to maintain your home. And if that's the case, you're being taxed at 12% from $16,651 up to $63,100. You've been taxed 22% at $63,101 up to $100,500. You've been taxed 24% at $100,501 up to $191,950. You've been taxed at 32% at $191,951 up to $243,700. You've been taxed at 35% on $243,701 up to $609,350, and 37% you're being taxed at $609,351 and up. Hypothetically speaking, guys, I just want to show you something real quickly. If you made, let's just say average, let's say you made $191,951, right? I got my calculator right here, guys. Let's say you made $191,951, and you're being taxed what? Times 32%. Guys, you're being taxed at, what is that? 191,951 times 32%. You at roughly, guys, shucks. Calculator that's not working here. Give me 1 second. 191,051 191,951 point. Okay, so that's $191,951 times 32%. You're being taxed at about $61,000. Are you guys hearing what I'm saying? You're being taxed $61,424.32. If you make $191,951, you've been taxed at 32%. 32% is at $61,424.32 is what you got to give the IRS. So you take away that, you take away 191,951, you bring home $130,526 after you gave the IRS over $60,000. That's when you working a job and you just working hard. Now, a lot of us out there, guys, we're just making all this money, and we're saying, okay, at the end of the year, oh, I'm gonna get all my money back. That's not true. Okay, I'm trying to teach you guys something. That's not true. Okay, because you got to understand what you're being taxed. And then a lot of times, a lot of people that I deal with, they go tax exempt. They say, okay, I don't want all this money being taken out of my paycheck, so I'm going to go tax exempt. And then at the end of the year, guess what? All the money that you did not let the IRS take, you know when they're going to take it from you? They're going to take it from you at the end of the year when it's time for you to file your taxes. They're going to get that money back. So when I talk to a lot of people, and people always hear me say, everybody needs a home-based business. Listen to me, guys. I'm dead serious when I say everybody needs a home-based business, because a home-based business allows you to leverage your tax write-offs. And it's legal. Bottom line, period. There's nothing that IRS can do about you leveraging your tax write-offs if you're doing everything right. Okay, I want to show you one more thing, guys, before I get into showing you how to leverage your tax write-offs. Okay, let's go inside of here and let's go into EITC credits. All right, let's go into EITC credits, guys. I want to share this with you guys as well. EITC credits, earned income tax credits. All right, some of you guys may be saying, okay, he's teaching us taxes. No, I'm not teaching you guys taxes, but you are learning taxes. I'm just showing you some of the things that you get when you're filing taxes during the tax year, okay? The EITC qualifications. Let's go EITC qualifications. All right, earned income. I have an earned income. Let's see if it's going to pull up for me. I'm trying to get these numbers pulled up for you as quick as possible. Here we go. 2024, guys. This is your earned income tax credit. Are you guys looking at this? Like I say, we only got 30 minutes. So I'm going to try to give you guys all I can give you for 30 minutes, but this is a bomb 30 minutes. This is a bonus 30 minutes. And if you're taking your time and you're watching me as I'm going through this thing, and if you're recording the screen or you're writing it down or you keep coming back to this video and looking at it and looking at it and looking at it, guys, you're going to be the bomb when it comes to understanding how to leverage your tax write-offs. All right, here we go. If you make $0, all right, up to $25,011, all right, you listen to what I'm saying. You would get for no qualified children. That means zero. That means you'll get up to $632 from what? The IRS. That's the credit you would get, right? If you got one qualified child, you'll get up to $4,213. This is one qualified child, meaning that if you are single, you can make up to $49,084, and you will get up to $4,213. If you are married, filing jointly, you make up to $56,004, and then you actually get $4,213. Do you guys see what's going on here? If you're single, the amount is a little less. It's about $5,000. It's about $6,000 less than if you was filing jointly. All right. If you got two children, if you're single, you make head of household, you make $55,768. You'll get up to what? $6,960. All right, for two qualified children. All right, one qualified child, it'd be $4,213. If you are married filing jointly, you can make $62,000, up to $62,000, and still get the same thing for one qualified child, and this amount for two qualified children. All right. If you got three children, if you're single, you make up to $59,899. You'll get up to $7,830. If you marry filing jointly, you can make up to $66,819, and you'll still get up to $7,830 for three children. That's just what it is. So when you filing your taxes and somebody telling you numbers higher than this, it's not true. All you have to do is go to the IRS and look at the EITC, Earned Income Tax Credit bracket, and it'll tell you exactly what you're going to get for one, two, or three children, and it'll tell you exactly what you're going to get if you're single, head of household, or if you're married, filing jointly. Bottom line, guys. See, so guys, hopefully you are getting some understanding out of what I'm teaching you tonight. Okay, so now after me showing you all of that, guys, let's just do some numbers. All right. Now, here is what everybody came to the actual Zoom meeting for. Okay. Everybody came to the Zoom meeting for this right here. All right. Here we go. Guys, the only way to take advantage of tax write-offs is you have to have a home-based business or standalone business. The lowest way to start your business is by having a home-based business. Now, I have a lot of clients because, again, you guys know I am a professional tax consultant, and I have tax offices and several other businesses. But when I have clients that come to me to get their taxes done, and I have some clients that come to me for years, and some clients have done it, and some clients have not done it. But I can't stress this enough, everybody. Listen to me. What I can't stress enough is that everybody needs a home-based business. Period. Listen to what I'm saying. Everybody needs a home-based business. You know, I want to make sure everybody was seeing my screen. I know I shared my screen. Hopefully, if you didn't hear see my screen, you did hear me. I know you did hear me, so that's a good thing. I know you did hear me. Make sure I'm gonna put it on share. Yeah, so I know you did hear me. Give me 1 second. Give me 1 second. Give me 1 second, everybody. Be a little patient. We're still gonna close this thing off right and make sure you guys got everything that you need. Let's see, share. Yeah, I guess it's already shared, but I'll just keep hitting it again. All right, there you go, guys. All right, so if the full screen wasn't up when I was teaching you guys this, at least you guys heard what I was saying, and you can understand the difference between uh, tax rates and EITC, the EITC table for your credits. Two different things. Tax rates is based upon how much money you make and how much you're going to be taxed. That's what I went over with first. All right. Secondly, I went over the EITC credit. How much money, if you're single, head of household, or married, filing jointly, how much money you can make up to, and how much money you would get a credit for your children, 1, 2, and up to 3. Now, some people, when they file their taxes, they be like, okay, I got 4 children, I got 5 children. It don't matter how many children you have. The EITC credit stops at 3. So every child after 3, that's a whole different story. All right. I'm not here to teach you taxes, but I'm just showing you the breakdown of when you have up to 3 children with your EITC tax credit. And I just want to share with you about your tax rates based upon how much money you got. And again, if the screen wasn't up, guys, I'm just breaking this down to you verbally so you can get a good understanding of what I was talking about when I was talking to you. Because I know I was going pretty fast because this call is only 30 minutes. We got 9 minutes left. And now I'm about to give you guys the cream of the crop right now. All right. As I was saying to you before, the only way to get these credits, you have to own a business, whether it be a standalone business, whether it be a home-based business. I have a lot of clients that come to me. Okay. Some of them go tax exempt, and at the end of the year, they trying to figure out, okay, I owe the IRS this money back. What I'm going to do? Okay. There's really nothing you can do because you went tax exempt. All right. I have a lot of clients at the end of the year. They make more than what you can make to get an EITC credit. Again, if you make more than, let's go down here and see if I still got it up. If you make more than, if you single and you got 3 children and you make more than $59,899, guess what? You're not going to get an EITC credit. I don't care if you got 3 children. You're not going to get that $7,830. And that's for every bracket that I'm showing you. That's if you made more than $66,819 if you was married, filing jointly. You are not going to get that 3 or more qualified children credit for $7,830. You're not going to get it. Period. You're just not going to get it. All right. So because of that, if you own a home-based business, it allows your expenses to be deducted from what? It allows your expenses to be deducted from your AGI, your adjusted gross interest, your adjusted gross income. I'm sorry, guys. You may hear a train in my background, guys. I got a train in my backyard. I love the train, but I don't love it when I'm teaching, guys, because you may hear the horn go, but I love it, guys, because it shakes my whole house sometimes, guys. It's just very, very relaxing to me. I just wanted to say that to you guys, because in the background, you're going to hear the train blow its horn. It seems like it always blows its horn as soon as it gets in the back of my backyard. But we may catch a break today, you know. Seems like we caught a break today. All right, cool. All right, guys, let's get straight to it. Again, guys, your expenses from all of the income that you make from your job, if you're working, if you made $100,000, right? But you started a business and that business cost you $30,000 in expenses. The IRS will allow that $30,000 to be subtracted from your AGI, your adjusted gross income. See, what I'm teaching you guys, a lot of people's not going to take the time to teach this to you. See, this is a bonus that I'm giving you guys because I want you ready to win. And I want you guys to really learn how to start a business from A to Z. And I'm going to give you the step-by-step guides. But you have to understand the tax brackets, and you have to understand how taxes work when you start your business at the same time too, at least the basic grounds. All right. So again, if you make $100,000 and you spend $30,000 in your business, the IRS is going to allow $30,000 to be deducted from your adjusted gross income. So that means you did not you did not make 100,000, you made 70,000. So if you made 70,000, then guess what? That means you're gonna be taxed on what? Not 100,000. You're gonna be taxed on 70,000. Okay, now I'm not gonna say that over and over and over again. You just have to go back and just listen to the recording because I recorded this, and you can just go ahead and rewind it back, rewind it back, rewind it back until you understand what I'm saying. But I'm gonna say it one more time. And this is for I don't care how much money you make. If you made 100,000, I'm just giving you the basic, simple understanding. If you made 100,000 and you spent $30,000 in expenses, the IRS will allow that $30,000 to be deducted from where? From your adjusted gross income of that 100,000. So now that 100,000 turns to 70,000. So you're not going to be taxed on 100,000. You'll be taxed on 70,000. So now that even goes down to if you got 3 children, and let's just say you made $70,000. Look at the numbers. $59,899. So let's say you $59,899. So let's just say you made 70,000, but you had $30,000 worth of expenses. If you didn't have a home-based business, you would not be able to get your EITC credit because you're over $59,899, right? But if you own a home-based business and you had $30,000 of tax write-offs and you made $70,000, let's do some numbers here, and you deduct $30,000, that's going to make you be having what? Let's say 70,000. You made $70,000, okay, and you're going to deduct 30,000. So that means you made $40,000, right? So because you made $40,000, that means you well under the $59,899. So guess what you're going to get back? You're going to get back a credit of $7,830 because you are under the $59,899. But if you didn't have a home-based business that allowed you to get some tax write-offs, you would not get any of this money back. You're probably owing some money. Do you guys understand what I'm saying? Now, I'm not here to teach you taxes, but I'm just want to show you the breakdown so you can understand how to leverage tax write-offs. And how to leverage tax write-off is to start yourself a home-based business. And I'm not saying start a home-based business by saying you got a home-based business, but you don't have legal documentation. In order for you to take advantage of tax write-offs, you have to go and get yourself an EIN number. You have to start yourself a legal business, a legal LLC, S Corp, corporation, or whatever entity you want to start. And I advise you, if you want to start, to actually follow the step-by-step guide to start your own business from A to Z. And it's going to teach you everything you need to know. Okay? My course step-by-step guide to start your own business from A to Z is going to teach you everything you need to know. But I'm just telling you the basics right now for how to leverage tax write-offs. And how to leverage tax write-off is you want to have yourself a business entity set up. You want to have your EIN set up. And if you have a product, you want to have your sales tax number set up. All the stuff you want to have set up. Okay? And then you can even go as far as taking some of the light bill in your house, the gas bill, some of the bills that's in the house that you live in. Take them out of your personal name, pay it off under your personal name, and because your business is attached to your home address, you now can open up a electric bill, gas bill, water bill. You can put these things in your business name. All right. Once you put these things in your business name, what that allows you to do is now what you want to do is in your home, you want to find an area in your home that you can turn to an office. I'm sitting in my home office right now. Okay. Then you want to find out the total square footage of your home. Let's just make it real simple. Let's say your home is 1,000 square feet. Let's say you found a place in your house that's 30%. Okay, when you measure it out. When you measure it out, it's 30% of your whole entire square footage of 100 of a let's just say let me just do some numbers, okay? Let's just say your house was 1,000. I want to do it real basic. Let's say your house was let's go average. Let's say your house was 3,500 square feet. All right, pay close attention. I'm going over 30 minutes now. I want you guys to understand this. So I'm hitting my calculator now. So I want you guys to take me serious and take yourself serious and get this. Your house is 3,500 square feet. All right. So let's just say you you got an office in that house, and that office is like right now, my office is, I say, about maybe 14 by 20, 14 by 30. My office is 14 times 30. My office is 420 square feet. All right, 420 square feet is what my office is. So if you're looking at 420 square feet, you want to look at, okay, uh 420 divided by you're talking about let's say 12%. Let's say 12% times 3,500. 12% times 3,500. 3,500 times. Okay, so we'll say 12%. All right, so we'll say 12% of 3,500. Okay, so we got for every thousand times 12% is 120 times 3, that's 360. That's right. So we're looking at 3,500 times 12% is 420 square feet. Listen to me now. You may have to go back to listen to this. You may have to go back and listen to this in order for you to get it. But that's why I'm recording it, so you can go back and go back and go back and listen. But that's 12%. So now that means that I can take what? That means I can take 12% of what, my mortgage. I can take 12% of my light bill, my gas bill, my water bill. I can take 12% of all of that inside of my household. Now, watch this. If I did not have a home-based business, watch this now, I wouldn't be able to take a percentage of anything. So I have to be paying out 100% of everything. But because I have an office that's 420 square feet out of a 3,500 square feet home, now watch this. The lesser square feet the home is, and the more square footage the office is, the more square footage, the more percentage you can take from the actual expenses in your home, because these are your expenses that you have to pay for instead of paying for those same expenses when you're outside that somebody else's building. Listen to what I'm saying to you now. I'm going to give you a breakdown on 12%, and we're going to go ahead and close this out, guys, because I'm like 3 minutes over. Now, listen. Now, let's just say you was outside and you had a 14 by 20 office somewhere else, and you was paying $700 a month. You was paying light bill. You was paying gas bill. You was paying whatever bills that associate with your office, right? So if you was paying those bills, you was paying the bills there. Yeah, you can get the write-off, but then you still paying your bills at home, and the bills you're paying at home is at 100%. You didn't get nothing back off of it. You're just paying 100% of all the bills at home, and then you're paying bills somewhere else. So that's why I tell people to start a home-based business, because you can take the write-off from the bills at your own house. You can get a write-off from your own bills, ladies and gentlemen. So let's break that down. So let's just say you got a mortgage of $3,500 times 12%. That's $420. Watch this now. That's $420 of credit that you're going to get. All right, listen, that's $420 of credit that you're going to get. Let me pull up the calculator so you can see this. I want you guys all to see this. All right, and then we're going to end the night off. All right, let's go to the calculator. Okay, where your calculator? Hang on in there, guys. You're going to be blessed with this understanding I'm about to give you. Okay, so that's $420. That's $420. Okay. Okay, plus that's $420. What's this now? That's per month. Because that's going to be your rent that you're paying for having your office inside of your home. You paying $420, so $420 is coming off of the $3,500 at 12%. Let's say your light bill is $300 times 12%. That's $36 a month. All right, so that's plus $36. Okay, so let's just say your gas bill is another $300 a month. So that's another $36 plus $36 a month. Okay, let's just say your cable bill, let's say your internet bill and your cable bill is $300, hypothetically speaking. That's another $36 at 12%. Okay, guys, let me go back over this. So that's 420. We had 420, all right, and then we had $36 equals plus another $36 equals plus we had another $36 equals, that's $528. All right. So what else we got? We got water bill. Let's say the water bill is $100 at 12%. So that's plus $12 at 12%. All right. What else we got in there? What else we got? Okay. Well, let's say we got we got internet, we got we got rent, mortgage, we got light bill, we got gas bill. What else? Let's just say that's it. All right, guys. Let's just say that. Let's say that's it. That's $540, right? That's not including the vehicle. That's not including the gas that you spend when you leave from your home to go handle business or but I'm not gonna add that in there. I'm gonna keep it real basic because it's not a tax class. I just want to show you how to leverage your tax write-offs. So we're gonna keep it real basic. We're gonna keep it at about $540. All right. Let me take a minute. Okay, now here's the next thing. In that office, you got to ask yourself, how much did you pay for supplies? All right, let's just say hypothetically speaking, you spend $100 a month on supplies. All right, we're talking about pens, paper, ink, etc., etc., etc. Let's say inside of your office space, you painted and you bought some extra items because you want to keep your office looking nice. Let's just say you spent another $300 on that. Well, I'm not gonna add that right now. I'm gonna add that later because right now I'm doing everything that's gonna be monthly. All right, what else is monthly? Okay, let's say you got some software in your computer. Software in your computer is plus probably about another $90 a month software. All right. So now we had about $730. I don't want to go no higher. I just want to show you a point. You guys get the point that I'm trying to show you. All right. So let's say this is your first year and you didn't really make any money. So what you're gonna do is $730 times 12 months that you're gonna get a credit. So you're gonna get a credit of $8,760. Now you have to take my course, step-by-step guide to start your business, start your own business from A to Z to really understand this. This is where I really break it all the way down. But tonight I just want to just give you guys a little something to get you guys to understand how to leverage tax write-offs. And the key to understanding how to leverage tax write-offs is what? You have to first have a home-based business, a legal home-based business, so you can begin to take tax write-offs. Some people come to me and be like, oh yeah, I got a business in my house. I do hair, I do this and I do that. I'm like, do you got a EIN number? No. Do you got a business license? No. You really don't have a business. You don't have a business, period. So the first thing you need to do is get yourself an entity set up, an LLC set up, get yourself an EIN number set up, and then get yourself a business bank set up, and then we can actually start learning how to leverage tax write-offs while you build your business. I call it take advantage of tax write-offs while you build your passion, while you build your business. There's nothing greater than taking advantage of tax write-offs while you build your business. The IRS have allowed you and has it set up for you to take tax write-offs while you build your business. But a lot of us don't take advantage of the tax write-offs, and we don't take advantage of building a business or even starting a business. The only thing we do is just work, and get hit up with all these taxes, get hit up because we lack knowledge. And we perish because we lack knowledge. And I'm here to share with you guys what you need to be doing and that's starting a home-based business, because this is $8,760 of a credit that you would get by having a home-based business. So hypothetically speak, let's just say you made $60,000 on this $59,899. Let's say you made that, right? And you had 3 children, and you made 60,000. Let's say you made 60,000 and you had 3 children. They don't care if you went $1 over this, you will not get this credit. But let's say you made 60,000. You will not get this credit because you made 60,000 and you got 3 children. And you try to ask your taxpayer, well, I got 3 kids, why I can't get this tax credit? I'm showing you right here why you can't get it, because you made over $59,899. But if you had a home-based business, look what that would do. $59,899 take away $8,760. Now you made $51,139, and know what that did? Because that expense came from out of your adjusted gross income. That means it deducted from out of that 60, and now you walked away from your job with $51,139, and they put you under the tax bracket. So now it allows you to do what? Get your $7,830 tax credit. Did you guys get that? Did you guys get that? Okay, that's it for tonight, guys. That's it. That's it. So you may have to just keep going back and recording back and back to get what I just taught you guys. But tonight I just taught you how to leverage your tax write-offs legally. The only way you can legally leverage tax write-offs is own a home-based business. And then you can start taking tax write-offs. Even if you're not making any money off your business, until your business starts making money, you still can write off things that you spend pertaining to the business. But you still want to take my step-by-step guide to start your own business from A to Z, so you can understand how to make sure that you have your business and your personal bank accounts are set up separately. Make sure that your income for your business is going to your business, and income going to your personal, going to your personal. These are all things that I'll teach you through the step-by-step guide to start your own business from A to Z. But tonight, I just wanted to show you how to leverage your tax returns. I'm sorry. Tonight, I just wanted to show you how to leverage your tax write-offs. All right, guys. If you guys got some nuggets out of this thing tonight, great for you. If you did not get it because I went so fast, just keep rewinding this thing back, and keep rewinding it back, and keep rewinding it back, keep rewinding it back, and it's going to just click. Then you're going to be like, oh, I understand what he's saying. And then once you understand what I'm saying, bam, join the step-by-step guide to start your own business from A to Z, so I can teach you how to do it the correct way without you just starting a business and doing everything the wrong way and end up having to come out a whole bunch of money like I did. That's the whole purpose of why I'm teaching you guys this now, because I'm compelled to teach you how to win, win, win. Hopefully I said something to you tonight that blessed your socks off, guys. And I'll see you guys on my next alphabet. I'm about to get ready to start, and the next alphabet is going to be N. Hey, guys, join my Facebook. Join my Instagram, join my TikTok, guys. If you're on here right now, just go to my Facebook. My name is ArthurJMoorer. That's ArthurJMoorer. Middle name J, last name Moorer. Look for me on Facebook, guys. Join my Facebook. This is where you're going to learn. I actually give it to you for free every day. But if you want to get the whole package, you can get the whole package all in one bundle with a step-by-step guide to start your own business from A to Z. Hey, guys, but join my Facebook. Learn how to start your own business from A to Z, and I guarantee you, when you're done with this, guys, and if you take it serious and you go alphabet by alphabet, you're going to win, 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 win. That's right, guys. You have tuned in to your real entrepreneur coach, ArthurJMoorer, and I'm out.